Hey, how's it going, everybody? Drew here, over here at Arcturus Cinema Headquarters. And today is episode 5 of the Business Origin Story podcast. And with me today is Mr. Joe Martinez. And how about you go ahead and introduce yourself, Joe?
Sure. My name is Joe Martinez. Out here in lovely Las Vegas, Nevada, originally from Brooklyn, New York. And I'm a realtor and loan officer here in the Valley.
I would love to learn more about your background, Joe. So please tell us what inspired you. Basically, give us the rundown of how you got started in your business and in that industry.
So, growing up in New York, I was always into technology. Uh, that was my major fascination growing up. Computers were becoming, household items when I was young, and that's what really drew me. And loved the idea of like hacking and all the things that were coming out during that time period. So, I spent the first half of my life in the technology field, and I ended up in tech sales. And what happened at that point was basically I fell in love with the sales process and fell out of love with technology. So I then decided, okay, well, if I'm going to be in sales, I better sell something that I want to be to know about and be interested in. And I first started off with life insurance and financial planning. So back in New York, I was working for a company called Bankers Life. And then from Bankers Life, I transitioned over to New York Life, where I learned a ton of information, a ton of concepts and ways to prepare for uh, retirement, long term wealth, multi generational wealth. And while that was something that I was passionate about, I'm actually still very passionate about it now. What really changed me over into mortgages and real estate was COVID. And the main piece of that was so at that point, New York Life was still hand delivering policies. So, how am I going to get these policies signed if I can't get in front of a person, right? So, that's number one. And then, two, how is COVID going to affect the guidelines for underwriting life insurance? So, those two things really worried me at that point. We didn't know what we were going to do. So, I had a networking group that I was a part of here in Vegas, and I asked the mortgage loan officer that was part of the group, if I passed the test, will you hire me? And I think he thought I was, either BSing him or I wouldn't take it seriously. I passed the test in less than 3 months, got hired, and the rest is basically history. I was really happy to get into mortgages right during COVID because the rates were so low. We did well. And what I've been doing mortgages for about 5 years now, maybe a little bit over that now. The transition into actually becoming a realtor, which is funny because I said that I would never be a realtor. The transition to becoming a realtor was the main reason for that is for some reason, people listen to realtors more than they listen to loan officers. Now, if it's me and a realtor can find me a house, but the loan officer can get me several hundred thousands of dollars to buy the house, I would be listening to the loan officer more than the realtor, but that's just not how it works. So a realtor does have a great deal of influence over their clients, and having that influence allows me to point them in the best possible directions for all services. So not only the mortgage, and I work with people who don't use me for the mortgage. I also work with people who use other realtors. So I don't mind that. I'm happy to play in the sandbox with anybody that's willing to play with me. And then the second part of it is life insurance, financial planning. I refer those to all folks that I know that will do them a very good service and have their best interest at heart. So it really allows me to direct my clients in a way that just being a loan officer wouldn't. So that's my journey.
That's beautiful. What were some of the biggest challenges you had in those early days? You mentioned COVID, obviously, that's a huge obstacle when everything was going virtual. But what were the challenges when you transitioned into becoming a realtor and becoming that source for your clients for not only getting a home but also life insurance?
The challenge in life insurance and financial services was much more difficult than real estate and lending, and I'll tell you the reason why. When you're working with life insurance, most people see that as another bill, another thing they have to take out of their pocket, which it is, unless you're funding it in different ways. And we do have there are constructive ways to do that that don't take the money out of your pocket. But financial planning as well, a lot of Americans see it as a bill, and they can't live in a life insurance policy. They can't live in an annuity, right? With a home, it's tangible, right? You can touch it, you live in it, and especially here in Vegas after the market crash, real estate has such a good connotation where I believe life insurance and financial planning, they still don't have the same positive connotation, and also the positive investment cash flow and things like that that you can do with a home that you can actually still can do with life insurance, but people just find the home a sexier sell, right? um,
Mm.
and with all the programs that are out there, it's been really it's funny. I told somebody recently that once I got my real estate license, my business in Vegas took off, and it's not because I was doing anything different. It's really because of the offering. And people had already seen me as someone who was smart and judicious with money and understanding how money worked. It's just the switch over to what the offering was, and that's really what changed the game for me and my business.
Right on. What would you say were some of the biggest lessons that you made when you were changing that offer, and all that jazz to your clients or your prospects?
The biggest things I learned from the real estate side, being a loan officer, I felt had a real value for me because a lot of realtors have to, the first thing they typically will do is they will take their client and say, okay, you're interested in buying a home. Great. Let me sit you down with a loan officer. The loan officer will qualify you and tell you how much you can buy, purchase a house for. I can do that myself, which makes the process much more streamlined. I think it
Mm.
also creates a second level of trust, right? Say, hey, I'm going to be able to take care of you, not only just finding the home, but on the financial side of the transaction as well. And it just speeds up the process for me because I know right away whether or not somebody's going to qualify or not. And then if they don't qualify right then and there, we have a plan to put in place for either 3 months or 6 months typically that'll say, okay, we got to work on credit. You need a little bit of down payment, whatever it might be that they're lacking in to get them ready to buy. But I have all those referrals set up in a way now where it's like, okay, here's the credit folks we work with. Here's how you can save some money, or here's how you can accelerate that savings. Different things like that that put people on a fast track to getting into a home. And there were people who currently are now shopping for homes because the rates have come down that I started working with 5 months ago to get them ready. So they're really in a good place right now.
Nice. Yeah, that's really awesome that you're able to be kind of that one-stop shop in terms of, like if they're not ready to buy, you can give them tools to build up their wealth or get certain things in place so they're the fix or credit you mentioned. So that's really awesome. And I was gonna ask you as well, where are you planning to go now with your business? What's on the horizon for the future?
So a couple things on the mortgage side, looking to hire some loan officers, part of my team, so that they can continue growing the business. And there are certain things that we have in place, referral partners or offerings like down payment assistance or whatever, that I think some of these loan officers will be able to then offer to their clients and get more people into homes. Because the goal is really just to get more people into home ownership, because most people that aren't owning homes are doing themselves a huge disservice down the road if they're unable to build equity and have that as a way to fund whatever it is, maybe retirement, college tuition, whatever it might be for their future. So teaching some loan officers are the things that we do, and also teaching realtors. I hired two agents recently on the real estate side, and while they don't have their loan officer license, they can still talk about many of the things that a loan officer can talk about, except for rate. That's really the only thing they can't talk about. And if they're able to efficiently and knowledgeably speak about the lending side, they also would become more successful. They would, engender more trust among their clients and get their clients to owning a home faster. So that's the next real goal, is to build a team below me and with my partners currently, that we can teach them what we do and just expand.
That's beautiful. And I'm curious, it's because it sounds like you have a lot of exciting things on the horizon, a lot of exciting things that you're working on with your business. and you sound like quite the busy guy. So I'm curious, how do you keep everything balanced and stay motivated every day?
The motivation part of it, I don't think that comes from outside. That comes from inside, and it's in the financial planning industry. When I was working with New York Life, I saw so many Americans who didn't save, who don't save for the future. The only thing they save with is typically 401ks and their homes. So the home and the 401k are really the two ways that Americans will save because they don't feel the reduction in their pay, right? Because the 401k comes out prior to taxes and they live in the home, so they pay for it because they need to. That that way is more palatable to them, and they're the two best, in my opinion, the two easiest ways to get people to start saving. So when I think of that, getting somebody who's a renter into a home, it just that's my favorite thing to do, frankly. Get somebody where they think they can't buy a home to where they can, and if we can do that, I think I'm doing my job and also bringing a valuable service to the world. And then just keeping balanced is I like to work out. I try to take care of myself, do all the things that will keep me running, and even mindset, spirituality, things of that nature to make sure my mindset staying focused. But yeah, and obviously going out, having a good time every once in a while. I co-own a networking group here in Vegas as well called Spark, meeting folks there. And it just what's great about real estate, you can practice it and run it any way that you like to, as long as you do it. If you do it, it'll work. But pick something, pick the prospecting methods you like. And if you do that, I think most people will be successful as long as they live it and kind of breathe it and be it every day.
I love that. I love that. And that's awesome that you're able to balance all that, cuz you know, it's like taking care of your body as well as your mindset, and also networking and building this relationship is so important for any business nowadays, because like everyone can do stuff on behind a computer, but it doesn't beat, you know, going out there and building those relationships, you know.
That's actually one of the things I'm expanding into more too is the social media side of things. There are a couple of services that I'm working with to get more content out there and even produce more content myself. But I do prefer in person. I do prefer being able to connect face to face. And I also wanted to start doing seminars and things like that. But we'll get there. We'll get there. It's been busy, so no complaints. You know, even with when the rates were higher, we were still busy.
That's awesome. That's awesome, Joe. A couple more questions for you. And that is, the first one is, what would you recommend to people who are perhaps renting and they're looking to buy a home? It's funny because I was chatting with a gal last night, and she was kind of in that situation where she's renting someplace, I think in North Las Vegas,
Hmm.
and she's like, I don't know if I should buy a home or not now, or I should wait. What would you say to a person like that?
So it's actually, I'll take this from my financial services background. People are always trying to time the market when it actually is more important to have time in the market, right? So the longer she waits or whoever waits as a renter, they're paying a monthly rent, right? And if you're worried about rates, what's your rate on your rental? It's 100%. You're never going to see that money again, right? So 6% or 5% or 4% versus 100%. Which one would you rather pay, right? That money you're never getting back. You're also not building equity. And it's interesting that we're having this conversation right now because rates have come down. As rates come down, typically housing prices go up. However,
Mm,
we're at a point where rates have just come down and the housing prices here in Vegas have not reacted to those rates coming down because it takes time for some of those houses to sell to reset the prices of the market, right? So we're at a
uh,
really interesting point right now where you can get a relatively low rate. And by low rates, I'm talking about in the fives and in the fours. So that's pretty close to the rates that everybody wants back from COVID, right? So those are pretty close. And then home prices haven't accelerated yet. So you're at a really good intersection of these two influential factors where you can get your house for a good price and the rate at a good price. The second thing is that most people don't know that are renting. Um, Here's my mortgage side, right? So the Are you familiar with permanent buy downs or buying down the rate of a mortgage?
I'm not too familiar with it.
So in mortgage terms, you have what's called a par rate. The par rate, like in golf, is the rate that doesn't cost you anything, right? So let's say that's 5%, or let's say 6%. If your par rate is 6, you can choose to buy that rate down to a 5.5 or a 5. It costs you money out of your pocket at closing to buy that down. But now that rate is your rate for the next 30 years. The issue with that is, number one, it's more money out of pocket at closing. But then secondly, let's say you refinance that mortgage, you want to keep that mortgage long enough so that the difference from your payment at 6% to your payment at 5.5%, you've had your return on the investment based on how much you paid to get that lower rate, right?
Mm,
So that's a
yeah.
permanent buy down. And that's where you have to kind of weigh that out. There is something also called temporary buy downs, where the seller actually pays for the buy down. And in that scenario, let's say your rate was a 6, and you do what's called a 2-1 buy down. Your first year's at a 4, your second year's at a 5, and then your third year and beyond is at a 6. The great thing about the temporary buy down also, though, is because you didn't pay for it, there's money that's sitting at escrow or at the lender that's paying the difference every month for the difference in the mortgage payment. So let's say after the first year, rates dip to a place where you can get a 4.5 for the rest of your 30-year term if you want to keep it that long. The remaining funds that are in that account that we're paying for the difference can be used to pay for your refinance. So
Oh,
instead
okay.
of you paying for your refinance, that money pays for it. So you basically get two loans for the price of one and get the rate that you now want for the rest of your life. And that reduction of 2 points in rate can get somebody from where they may have been paying 2,500 for their mortgage down to 2,200 or even 2,000. And now your mortgage payment's more palatable. It's closer to your rental. And now you get in the market, you start earning equity, and that's how you start somebody off.
Beautiful. That's really informative. I appreciate you sharing that because I know a lot of people, kind of in a situation like my friend. So that's really good information to share. And then I also wanted to ask you another question, and that is, where would you recommend people start at getting in your field, in your industry?
Well, one more thing I thought of for your friend. They don't need 20% down to buy a home. That's another big fallacy that people believe is the truth. So it's not, you can buy a home with 3% down, 5% down, 1% down, or if you use down payment assistance with very, very little out of pocket. So that's another thing people need to know. And then to start in this industry, if you're a realtor and you're starting as a realtor, go get your license or go to a team that's going to pay for you to get your license, and just bring in somebody who wants to buy. If you're with a team that really wants to see you succeed, all you really need to do is bring in somebody that's looking to buy a house. They should be able to lead you down the road after that. Don't trouble yourself too much with learning all the in and outs of contracts and paperwork and things like that. You will learn on the fly. And because the other issue is too, most people that come into this, they may have some money saved, but your first closing is probably going to be at least 3 months away. So if you don't have enough to cover that, the main thing you need to do is market, 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 get clients, speak to your sphere of influence, get somebody that you know wants to buy a home, and have your team work with you. Split it. Who cares? 100% of nothing is still nothing. Get some money in the bank account, right? That you've made, and then you get the experience along with it at the same time. On the real estate side, that's number one. And then two, on the mortgage side, you've got to apprentice. It's almost like being a plumber or an electrician. Go work with somebody who knows how to do mortgages, because that's more complicated than the real estate side, in my opinion. On the real estate side, you're actually not supposed to do anything else other than facilitate a transaction. So you're very
Mm,
hands off. You hire professionals to talk about the inspection or take a look
right.
at, that you're supposed to stay away from that because it's not your field of expertise. On the loan side, there's tons of guidelines, and you don't want to be responsible for getting somebody into contract on something and then realizing afterwards they don't qualify because of a question you didn't ask. And the
Mm,
client's not supposed to know that either. So get with somebody who's willing to teach you and help you. And that's why I was really lucky during COVID that the team over at FBC took a shot on me and it helped me out a lot.
that's beautiful. Yeah, that's really, really great advice. Appreciate you there sharing that, Joe. Two questions I have that I wanted to ask you before we wrap out of here. One is, do you have anything else you'd want to share? And then the second is, where can people find you?
Sure, homeownership is key to a successful financial future, especially in Las Vegas. The barrier to entry is nothing like New York or LA. I'm from New York and I owned houses in New York back 20 years ago. It was way, way more difficult to get into a house in New York, and especially now. In Vegas, the price point is still manageable, including with down payment assistance and things that we can do for you. That's number one. Number two, don't be afraid to talk with professionals in different fields. A real estate agent, a mortgage loan officer, a financial advisor, a life insurance person, all those people will meet with you and sit with you for free. I'm still passionate about financial services and insurance and protection of that nature. Most people, unfortunately, wait until they have a life event to think
Mm,
about getting life insurance, to think about getting long-term care insurance, and then it's too late. And then it would take years, if not ever, where you can get qualified for that again. So sit with folks on those particular industries, plan ahead. And for me, my phone number is 702-235-3225. Anybody wants to ask me any question when it comes to real estate, send me a text, give me a phone call. I'm always available. I'd love to help anybody get into a home because that's really the passion of what I do.
very cool. Very awesome, Joe. And then you also mentioned that you're on social media as well. Like, are you mainly on Instagram or LinkedIn? Where are you on social media?
My Instagram, I have two. It's I've got homes and then Joseph Martinez Realtor. Then I'm on LinkedIn as well, Joseph Martinez. I'm on Facebook as well, but there's really no way to link you on there. Yeah, I post houses that I go see and just different types of decor inside of homes. My next project is going to be using a whiteboard and just going over different mortgage and financial related topics and posting that on YouTube and then cutting it up into shorts. Because I think there are so many concepts that I've learned that New York Life and other companies have taught me, and other books that I've read have taught me that more people need to hear about. So that's actually just a passion project. I'm just doing that, and let's see what happens from it.
That's beautiful, Gio. Well, I appreciate you sharing all that. That's awesome. Appreciate you coming on the podcast here and sharing about your business. And thank you to everyone tuning in, checking out this episode. And we will catch you on the flip side and catch you later. And be sure to subscribe to our channel to get in touch with the latest updates and the next episodes. And be sure to give Joe a follow on social media or to give him a call if you have any questions. Anyway, thank you so much for watching again and stay classy.
Thank you.
Later.